Get ready, PC gamers. This is PC Gaming Pulse, and we're diving headfirst into the biggest tech news hitting the scene right now. First up, Intel is making massive moves, but is it enough to overcome a colossal $13 billion problem? Then, we break down how Nvidia is set to score big with its latest strategic partnership. We're also looking at the latest analyst ratings for Intel and whether they signal a turnaround. And finally, we're questioning if those highly anticipated collaborative PC chips from Nvidia and Intel will actually materialize, or if they're just a pipe dream. Stick around, you won't want to miss this. Hit that like, subscribe, and ring the notification bell so you never miss an update. Intel's stock is soaring, but a huge financial storm is brewing. Intel has been on an incredible roll lately, with its stock price shooting up by a remarkable 48% year-to-date, adding over $50 billion to its market value. This surge is fueled by a massive $5 billion deal with Nvidia, significant new funding from SoftBank, and an accelerated $8.9 billion payout from the U.S. administration. However, beneath the dazzling headlines, a closer look at the numbers reveals a persistent and massive drain from Intel's chip Foundry division, which has hemorrhaged over $13 billion in the past year, despite generating nearly $18 billion in revenue. The critical question remains. Nvidia CEO Jensen Huang has confirmed that while Nvidia is partnering with Intel, they are still a customer of Taiwan Semiconductor and haven't committed exclusively to Intel's foundries. This has led to continued skepticism from analysts. Citigroup has even downgraded Intel to a sell rating, citing minimal chances of success for the foundry. Wall Street's profit forecasts for Intel remain cautious, with modest growth expected for the next couple of years. This puts Intel's current stock price at a high valuation multiple, a level typically reserved for companies with strong, accelerating earnings growth, which Intel is currently not demonstrating. Adding to the concern, Intel's capital expenditures are projected to remain high, with $18 billion this year and $15 billion in 2026, pushing free cash flow further into negative territory. Experts like Ivana Delevska from Spear Invest and Nancy Tingler of Laffer Tingler Investments have voiced concerns, emphasizing the need for strong and sustainable earnings growth to justify the current valuation. While Intel's new backing provides significant support and market buzz, investors anticipating a straightforward turnaround should proceed with caution. Don't go anywhere, because the impact of this Intel-Nvidia deal on sustainability is massive. Next, we'll explore how Nvidia is leveraging this partnership to boost its green credentials. Nvidia's $5 billion Intel deal, a green power play. Nvidia, currently the world's most valuable company, is aggressively pushing for energy efficiency, claiming its accelerated computing technologies could save the planet trillions of watt-hours annually. This message is crucial for its major clients like Amazon Web Services, Google, and Microsoft, who are under immense pressure to meet their emissions reduction goals. While Nvidia's competitors, AMD and Broadcom, have had robust sustainability strategies for years, Nvidia's is comparatively nascent, with its first emissions targets validated only in early 2025. The recent $5 billion joint development partnership with Intel, however, significantly alters this landscape. This collaboration grants Nvidia access to Intel's 2 decades of institutional knowledge in reducing the environmental impact, emissions, waste, and water usage associated with semiconductor manufacturing. Nvidia's own greenhouse gas emissions more than doubled between 2023 and 2025, reaching 6.9 million metric tons of CO2 equivalent, while its absolute emissions reduction target aims for a 50% cut in its operations and electricity consumption by 2030. This represents less than 1% of its total carbon footprint. The majority of Nvidia's impact stems from the energy its chips consume during AI model training and generative AI applications, Scope 3. To address this, Nvidia has committed to encouraging 2/3 of its suppliers to adopt emissions reduction targets by 2026, a goal it has already surpassed with 80% engagement. Instead of an absolute Scope 3 target, Nvidia is focusing on reducing the emissions intensity per computation by 75% per petaflop. This intensity metric, which Nvidia plans to report on starting in 2026, along with a more comprehensive emissions inventory, is seen as its biggest opportunity for environmental impact. The partnership with Intel, focusing on data center technology and integrated PC processors, is expected to yield benefits in manufacturing sustainability. Intel, with a carbon footprint over 3 times larger than Nvidia's, has invested billions in environmental initiatives, resulting in a 70% reduction in absolute emissions since 2006 and significant electricity savings through conservation efforts. Intel also aims to increase the energy efficiency of its chips tenfold by 2030. Aligning with Nvidia's goal of reducing Scope 3 emissions through more efficient product use. But is this Analyst upgrade for Intel a sign of genuine recovery or just a temporary reprieve? Next, we dissect the latest Wall Street sentiment surrounding Intel's stock. Intel stock sees rating boost amidst market scrutiny. Intel Nasdaq, INTC, has received a rating upgrade from sell to hold from Erste Group Bank, a move that signals a potential shift in analyst sentiment. This upgrade comes as the stock hovers around $29.53, with a notable trading volume compared to its average. Several other analysts have recently adjusted their outlooks on Intel. Citigroup maintained a sell rating, but increased its price objective to $29. Sanford C. Bernstein reiterated a market perform rating, while New Street Research significantly raised its price objective from $23 to $32. Stifel Nicolaus also adjusted its price objective upwards to $24.50 with a hold rating. Adding to the positive signals, Benchmark upgraded Intel from hold to buy, setting a price target of $43. Currently, the stock holds an average rating of reduce across various analysts, with an average target price of $25.23. Financially, Intel reported a net loss of 10 cents per share for the last quarter, missing analyst estimates. However, revenue exceeded expectations at $12.86 billion. The company's financial health shows a current ratio of 1.24 and a debt-to-equity ratio of 0.42, with a market capitalization of $129.25 billion. Despite a negative return on equity and net margin, institutional investors have recently increased their stakes in Intel, indicating growing confidence in the company's future prospects. These investors now hold approximately 64.53% of the company's stock, reflecting a significant belief in Intel's strategic direction and potential for recovery. While analysts are reassessing Intel, the true test lies in the tangible products hitting the market. Next, we investigate the timeline and feasibility of Nvidia and Intel's revolutionary PC chip collaboration. Nvidia and Intel's PC chip dream, years away. Speculation is rife about the timeline for the co-designed integrated CPUs from Nvidia and Intel, with current estimates suggesting these groundbreaking products might not hit the market for several years. This follows Nvidia's $5 billion investment in Intel, which includes Intel supplying CPU cores for Nvidia's data center use, and a collaboration on mobile processors, where Nvidia would contribute RTX chiplets for integration into Intel's architecture. Nvidia CEO Jensen Huang indicated that the partnership, which dates back a year, would not alter Intel's existing roadmap, but would add premium options. However, industry sources from competing firms anticipate the first collaborative products to be more than 2 years out and are keeping their own roadmaps unchanged. Doubts linger about Intel's capability to deliver such complex, highly integrated products, especially concerning the integration of Nvidia's NVLink technology with Intel's CPUs, a feat that past engineering missteps and recent bugs have cast a shadow over. Competitors also question Nvidia's commitment, given the strength of its existing discrete GPUs. Concerns have also been raised about the influence of SoftBank's $2 billion investment and U.S. government input on the development timeline. Despite these doubts, which some dismiss as FUD, fear, uncertainty, and doubt. Intel's dominance in the laptop market, holding about 80% share, is seen as vulnerable. Rivals like Qualcomm are actively trying to gain ground with new Snapdragon mobile processors for laptops, though current market share for ARM-based Copilot Plus PCs remains low. Historical collaborations, like the Intel AMD, KB Lake G chip, showed potential but ultimately failed to gain significant traction, partly due to unclear support structures. Experts suggest that adapting Nvidia's Blackwell architecture to a chiplet design using a standard bus like PCI Express could take up to 2 years, with CPU integration, packaging, and testing adding more time. A realistic launch could be spring 2027, assuming a standard PCIe bus, not NVLink. These collaborative CPUs are envisioned as premium offerings, likely fitting into the upper mid-range of Intel's Core Ultra lineup for thin and light notebooks, with higher-end performance likely still requiring separate discrete GPUs. That's all the groundbreaking tech news for today. But before you go, let's do a super quick recap of everything we covered. And that's a wrap on today's PC Gaming Pulse. We saw Intel's stock surge thanks to an Nvidia deal, but a massive $13 billion Foundry loss still looms large. We explored how Nvidia aims to boost its sustainability efforts through its Intel partnership. We also analyzed the latest Analyst ratings for Intel, showing a mixed but slightly more optimistic outlook. And we questioned the lengthy timeline for Nvidia and Intel's collaborative PC chips. Don't forget to smash that like button, subscribe to PC Gaming Pulse for all your gaming tech news, and ring that notification bell so you're always in the loop. Let us know your thoughts on these stories in the comments below, and follow us on all social media platforms for more exclusive content.